RMI is a subsidiary of RMB Holdings. The company was formed for the specific purpose of holding RMB's insurance assets. RMI will focus on investing in the financial services sector. Of course, the company listed around 3 months ago, and it's currently trading at around 12 Rand and 39 cents. Of course, listing at around just under 14 Rand a share. Ron, let's kick off with you.
You know, just before the show started, Eleni, we spoke about whether it was a good idea or not to separate the two entities. I think it is, because you've got two focus entities. You've got the banking, quasi-banking in terms of RMH, and now you have RMI, which holds all the insurance company within the group. It's a very interesting structure in that you have about 25% of Discovery, and we all know what Adrian Gore's managed to achieve since he started this operation a number of years ago. Certainly created wealth. We have also in that entity, we have 86% of OUTsurance. They've just recently acquired another 45% with about 16 odd percent, 14, 15, 16% held by the share incentive scheme, and then 25% of MMI. MMI is the old Momentum and MetLife, which have been combined into one entity. Still lots of synergies hopefully to come through in the course of time in terms of cost saving and the like.
So it's a holding company basically.
It's basically a holding company.
Exactly,
as such.
Exactly, just for the insurance space. Okay, Chris, your sense.
Yeah. As I say, it's a more focused entity. I think Ron made that point, and I think at this stage there is still a lot of ifs and buts and what have you. There's some good companies and good brands that they've put in there. You know, without a doubt, I think as it establishes a track record over time, it's great. The only trouble is the insurance sector as an investment area has been not that exciting over the last several years with you know, the other big players there, you know, not really doing too much. And that's the question, as to what extent can we see either this company shake the sector up and this is the go-to stock, or will this go to sleep with the rest of the sector?
Well, it's fascinating, and perhaps Oliver, you can offer a little bit of insights with regards to investors out there wanting to have a specific play on insurance companies, and here's a holding company that has a little bit of the best in South Africa. Would you view it that way?
Yeah, no, definitely. I think so. You know, as Ron said, it's got Discovery, it's got OUTsurance in it. The only thing with me, not very volatile. You know, I don't think, but it is newly listed, so not something that's going to be a great trading stock going forward.
Speaking from a trader's perspective,
From a
I'm sure these gentlemen will say, great, it's not volatile.
We're just saying, yeah, the question is, you know, is it something you put in a portfolio? I think if you're looking for insurance exposure, it's probably something that one can consider. Obviously, one needs to start establishing, you know, greater expectation as far as the, you know, the research side is concerned. That will come through, but I think, you know, as part of RMB, you know, they were a bit of a, how to say, it's not quite certain what they're going to produce on their own.
Well, it's fascinating, and if you look at share price performance, you know, as I mentioned a little earlier, debuting at 14 Rand a share, and now it's sitting at around 12 Rand 39 cents a share. Is that a sign of the times?
Remember, it's come back from a low. Chris was talking about a low, well, you were talking about a low base, about 10 Rand 50. So it's clawed back a lot there, Eleni. You know, you have got a very, very nice underpinning, probably about a 6.5% dividend yield. What I also like about, in terms of strategy going forward, the original founders and the hands-on operators of RMH, being Laurie Dippenaar, Paul Harris and GT Ferreira, are very hands-on sort of guys. They're not going to let this thing languish as an unexciting investment trust as such. If you look at the constituents within this operation, and Chris, I think, referred to this obliquely, you have got an incredible operation in terms of Discovery, innovative thinking, strategic thinking going ahead, and OUTsurance, which is a new model, cutting out the middleman, having built up a very nice niche in the market. So, you know, there's still probably things to transpire within
Oliver,
this entity.
You're sitting there listening intently. You've got two different rhetorics playing out here. Ron talking about the holdings within RMI. relatively exciting. And then Chris is saying that overall in the insurance space, we haven't really seen much excitement. Your sense on this? I mean, we know that the volatility doesn't excite you, but in terms of the holding structure?
Yeah, I've got to agree with Ron. You know, if you think of any kind of insurance company these days, you immediately go straight for outsurance, you know. So that whole new business model, I think going forward's got a lot of great prospects. And with them holding such a big portion of it, I think, you know, going forward, if you do want exposure to, you know, in the insurance sector, then most definitely this is the one to look for.
Yeah, look, from a trading point of view, I agree there's no excitement. We talk about a high of 1,400 and a low of 1050, but that occurred within days of the listing as the market's trying to find its feet. Literally, once it established the range, it's really been 12 to 12.50, and that's about it. You know, there hasn't been much, but I think we now need to try and understand management's plans, and both, you know, the insurance companies that are there are innovative. So I think in that sense, Ron probably may be right. It may shake up the sector. You know, it's not as if they are introducing innovative ideas, etc. Will this then provide, will great companies translate into a good investment? Because it's not always the same, and that's the thing. But this is certainly one that would be interesting within the insurance.
So, Chris, hot or not then for you? And also you've got to look at it relative to where we are in South Africa in an economic environment at this point in time. I think what consumers are doing.
Within the sector, it's hot.
Hot, okay.
Yeah, within the sector.
So you would be buying then, 12 Rand 39?
Yeah, if I wanted exposure, in other words, looking at the index, I'd put this in the portfolio.
High dividend yield, defensive, great portfolio unlock for those who've got a little bit of patience over the next year or two to see how this thing really starts to go ahead in terms of strategic, in terms of acquisitions. And again, to me, it's not a passive investment trust type of operation.
So where would you put a price target on RMI?
Very difficult. Well, I'd like to see the results coming out probably around about mid-August, September, and then to do a re-evaluation in terms of a target share price.
Oliver, I know the volatility doesn't excite you.
Yeah, volatility not so hot, but other than that, I think it's a great company, and I think it's hot.
So buy at 12.39.
So accumulate, yeah, most definitely.
Okay, fantastic. We now turn our attention to consumer products company AVI. Of course, it is a company that has various subsidiaries, and we know that it's in the manufacturing, processing, and of course in the food and apparel space, as well as a little bit of cosmetic as well. We've spoken about the stock before. It's an interesting company at this point in time, and we know that it can be sort of juxtaposed against the likes of Tiger Brands. But Walmart coming into the space, your view on this?
Yeah, I think Angloval is not necessarily negatively affected. I think they will still form part of the supply chains, you know, I don't think they can be cut out. You know, if I were to just look at this, I think this is in quite a strong bear market. It has lost momentum over the past few months, but I mean, since the low in 2008, it's you know, more than doubled. It's already exceeded the 2007 high, suggesting that, you know, if you're looking at the overall market, there's a lot of internal strength in this particular company, you know, on a relative basis, and that alone tells you that its peak already exceeds the 2008 high, or sorry, 2007 high, and its price earnings ratio isn't there. It hasn't got to an expensive level. It's still at where one would say roughly, it's about 14. It's where its longer term average is. So in other words, it's fairly valued, and if you've got growth on that, there's still value in this particular stock, and the relative strength, I think, is showing that.
And we're looking at those margins, sitting at 16.5%, Ron. And dividend yield around 3.6%?
Forward, I think, for this year, we've just had a trading update, which came the last couple of days, 23 to 33% up after the same sort of numbers at the interim stage. So this is coming off a very robust interim number there. What I like about this is the proliferation of brands. It's all about brands, brands, brands. I mean, you know, you've got things like Spitz, which people In rural areas, Polokwane is one of their best stores. People who want Italian shoes, who are prepared to pay 1,000, 2,000 rand or whatever per shoe. Then you have fragrances on brands. You've got Yardley, you've got Cosmetics Coty and the like. Then you've got Kirk Geigner, and you've got some of the other good clothing brands. That end of the market doesn't seem to be impacted. People who want brands are prepared to pay for brands. You look at the composition of the portfolio, very different to that of Tigers and the others there. You've got a whole proliferation of teas and coffees and biscuits, right from the top to the middle to the lower end, snacks and the like there. One of their major problem areas are Pesca in Argentina has now been sold.
Exactly, yeah.
They've taken in terms of these final numbers, a 40 million rand loss, I think it was. The impairment of the assets,
$10 million, if I'm not mistaken.
$10 million they're selling for. The impairment was taken last year, so they are now free of this noose around their neck. A major challenge lying ahead is still I&J, chilled foods and the like. With the strength of the rand, exports to Europe and other areas have been under pressure. With the price of fish going up and affordability, perhaps people have switched to chicken. But I think this is a turnaround situation with additional catches on the hake side and the like.
With regards to the margins, and I mentioned sitting at around 16.5%, the Africa portion for the company only making up about 8% of overall revenue, but margins are better there. So, Oliver, do you think that there should be more of a focus there, and perhaps, as Ron was alluding to, I&J being a bit of a problem child, and perhaps thinking of disposing of that and looking and focusing to the efforts on the African continent?
Yeah, I think they could definitely consider that. Like Ron said, the rand has very negatively impacted the stock. Margins, like I said, have been improving quite nicely off low commodity costs, and I think around about that 16.1%. So coming back to your question, I think that most definitely could be very beneficial for them.
Again, the big elephant in the room, Walmart. Is that an elephant for you, or do you think that will turn out to be a baby mouse?
No, it is an elephant. There's no doubt about it. And Anglo will have to actually obviously play their cards quite quickly and carefully to make sure that they are actually part of that juggernaut, as it were, or else they've got the potential to be harmed. Obviously, I think they will be part of it. Their brands are strong enough to actually be landed up or potentially be part of that supply chain, and that will help improve the access to Africa anyway. And that's, I think in any case where Europe might be, struggling for margin because of the strength of the rand, that isn't the problem into Africa, and I think you will see growth there.
Oliver, hot or not, AVI?
Yeah, hot was my last hot stock when I was here, so most definitely.
Indeed, okay. And you'd be buying at these levels. Price target, is it a buy and hold for you?
Yeah, most definitely. Once again, the volatility is not too great, but buy and hold, accumulate.
Ron sitting with a big smile. How does the volatility work for you, Ron?
To me, this is a good defensive stock. The brands are absolutely superb. You've got a unique situation in terms of food, fashion brands and the like. To me, this is going to be one of the winners going ahead. I'd certainly rather have this than Tiger Brands. The thrust into Africa, I think that'll come, but that's going to take time.
Of course, yes.
Yep.
The
I
brand,
think
of course, he's alluding to Jimmy Choo.
Yeah, something like that.
Yeah.
No, I think it's hot, but I'd be wary in terms of the entry-level price. You're getting it at more or less the high end of the range, and so one's just got to be careful that you are coming in as a Johnny-come-lately, as it were, if you're getting in now. But it's still a hold.